Hello and welcome to Smaulgld. In case you missed it, top gold and silver stories from the week ended July 30th, 2016. The title of this podcast is Sharp Gold Price Increase Belies Dramatic Decline in Asian Gold Demand. Let's get right to it. If you're not a Smaulgld subscriber, please sign up at the website smaulgld.com and you'll get the blog posts that we put out as they come out. And also, please remember to subscribe to the Smaulgld YouTube channel. The top stories of the week involve the historic nomination of Hillary Clinton for President of the United States, the first woman ever so nominated. However, her nomination was greeted with boos and jeers of "lock her up." Now, this "lock her up" chant occurred in both the Democratic Party by disgruntled Bernie Sanders supporters and other progressives who do not see Hillary Clinton as the proper standard bearer, as someone fighting for the people and against the banking interest. And of course, the Republican Party convention also erupted in similar jeers and cheers of "lock her up." One thing that I found was telling was that during the Republican convention, when Ted Cruz did not officially or explicitly endorsed Donald Trump, he was booed. But when Senator Sanders explicitly endorsed Hillary Clinton, he was met with a series of boos. So this year clearly is the year of the anti-establishment, anti-politician. And we see the Democrats are still, and the Republicans were, also trying to court support of politicians and news media outlets and claiming their candidate was better because they had lined up the support of CNN, Washington Post, New York Times, media outlets like that. But I believe this year these types of political endorsements are not only less important, they're in fact to some degree a negative. This, remember, is a year in which Trump openly insulted the former president's brother, Jeb Bush, as low energy. He called Hillary Clinton and continues to call her crooked Hillary. And this type of utter disdain and disrespect for politicians and in general is still playing well to the public. And years ago, this type of disrespect would have probably disqualified a presidential candidate. But in this year, it seems to encourage Donald Trump. And that clearly highlights the changing political environment that we have. The other top story was the continued aftermath and the release of the DNC documents from WikiLeaks. And during that, if you read through those documents, or just read the accounts of them, it clearly showed that the DNC went out of their way to not only try to scuttle Bernie Sanders' candidacy, but also how they worked in hand in glove with the media outlets like CNN to promote Hillary Clinton's candidacy. Now, I would have thought after they were kind of caught out doing this that they would, you would think, try to fall back to some more objective coverage, but they did not. Indeed, they went on the offensive and they started to criticize Donald Trump for his supposed encouragement of Russia to release if they had them, the 33,000 emails that Hillary Clinton had deleted. Now, they were saying it showed Donald Trump didn't take national security seriously. That's what Joseph Gregory said. Now, of course, if anyone didn't take national security seriously, it was Miss Clinton, their favorite standard bearer herself, who, according to the FBI, was extremely careless in the handling of classified material and national security for years, whereas Donald Trump made a offhand comment where he did not explicitly encourage the Russians to do anything other than saying if they had the emails, they should turn them over. And interestingly enough, those emails that were deleted, supposedly there's nothing on them because the Clinton campaign and Hillary herself said they were nothing more than emails involving her wedding plans for her daughter and yoga lessons. So, but it's interesting to see that the press still is going to support Hillary Clinton, and it seems that Donald Trump is going to be as profane or as irreverent as he possibly can be. And we'll see how that all turns out in November. In any event, enough of that. The top economic story of the week was the continued march higher of gold and silver after the FOMC meeting, where interest rates were not raised again, and the release of the abysmal GDP numbers for the first half of 2016. Gold closed last week at $1,322 an ounce and closed this week at $1,350 an ounce, up 2.1%. Silver closed last week at $19.59 and closed this week at $20.28, or up 3.5%. As a result of the larger rise in the price of silver, the gold-silver ratio ended the week at 66.55 to 1. If you click on the link gold and silver ratio, you can see historic charts of the gold silver ratio as well as a live chart. It goes back about 10 years, I believe. So please click on that link if you're so inclined to track the gold silver ratio. Charts of the week. We usually do a chart of the week. This week we're doing a few charts. The first chart shows the sharp decline in Chinese gold demand in 2016, and we'll cover it later in the podcast in a couple of minutes. The sharp decrease in the Asian gold demand, including Chinese gold demand, Indian gold demand, which are the two largest consumers of gold. This year, their demand is down dramatically, and yet we see an increase in the price of gold. This chart here shows the withdrawals on the Shanghai Gold Exchange through June compared to prior years. And as you can see, this year, while the demand is good compared to prior years, it is not at the same level as last year's record year. We talk a lot about the gold-silver ratio, but few people talk about the gold-platinum ratio. Many of you may know that platinum is 10 times rarer than gold and usually trades at a premium throughout its last 50 to 100 years, usually trades at a premium to gold. But in the past year or so, gold is traded at a premium to the price of platinum. So please check this chart out. If you're interested in the gold-platinum ratio or learning more about platinum, click on this link, the gold-platinum ratio. You can see historic charts as well as a live chart. Right now, gold is priced at 1.19 to 1 to platinum and has been trading at a premium since pretty much at the end of 2014. Another chart that I think is worthy of looking at is gold to British pounds. Last week we showed that silver was up about 55% against the British pound. Gold is now up about 40% against the pound, and a large portion of that increase occurred, as you can see here, right as the Brexit vote was announced. Gold shot up and has basically not looked back. It is trading now at about 1,050 pounds per ounce. Now, here are some of the stories we followed or commented on. I'm not this week going to go through. We're going to make this podcast a bit shorter. Each and every one of the links, please check out this blog post if you want to look at the links, see what's there. There's a lot of interesting information, but what I found was that my average YouTube visitor looks at this type of podcast. If it's 40 minutes, only spends 16 minutes on it. So we're going to try to keep it a lot shorter today. If you're interested in more information, please go to the website, check out the blog post, and click on the links. We're not going to go through the U.S. Mint data sales. They're all there. They were very bad this month on a comparative basis. The U.S. Mint sold this month only 1.3 million American Silver Eagles after averaging well over 4 million for the first 6 months of the year, and they only sold 30,000 American Gold Eagles. So like Asia, that's experiencing a decline in physical demand, there also appears to be a decline in physical demand in the United States, and yet we're seeing an increase in the price of gold and silver. Interesting one, I will mention Japan opened a physical gold trading market earlier during the week. Western banks, retail banks, are looking to institute negative rates. But back to the concept of Asian demand faltering. There was a number of articles this week that talked about the Asian physical demand falling. We've been covering that all year as we cover the People's Bank of China. Their gold reserves, the additions to gold reserves have been down. The volume on the Shanghai Gold Exchange has been down. The Indian imports, official imports, have been down. Overall, this leads to a circumstance where you have the two largest gold consuming nations having a declining physical gold demand during a period where the price is rising. Now, some of that demand has been made up, as we've talked about in prior podcasts, by gold demand in London. Swiss exports to London have increased dramatically, and that's presumably due to the gold that is flowing into Western ETFs. So the Western demand for ETF products, paper products has sort of balanced out the decline in demand in Asia. But the retail demand in the United States, as measured by gold demand for American Gold Eagles, the Perth Mint demand, the Canadian Mint demand, those gold numbers are not very robust at all. As you can see in this chart here, People's Bank of China over the last 6 months, in May, just 2 months ago, they added 0 tons of gold to their reserves. Now remember, the People's Bank of China is not China's gold. It is only the People's Bank of China, their central bank, how much they put in. However, they are adding less gold to reserves than they were in the prior 6 months. And in the last 6 months, the amount of gold they've put into reserves is 45% less than they put in the prior 6 months. As I mentioned, the People's Bank of China is not all of China's gold. There is gold elsewhere in China, but as we'll see, imports of gold into Hong Kong have also been down, and the volumes, and perhaps the best indicator of Chinese gold demand, are the volumes of the withdrawals on the Shanghai Gold Exchange, which are down 29% year over year so far this year. Indian gold imports are down about 45% so far this year, and that's a result of the Indian government placing a 10% import duty on gold and also a 5% sales tax on jewelry, gold jewelry. Now remember, both in China and India, jewelry demand is actually trumps the investment demand, as jewelry acts as both an investment and an adornment for Chinese and Indian people, and they are very price sensitive. So Indians and Chinese purchased large amounts of gold and silver in the last few years when the price was lower, and they seem to have pulled back on their purchases. And indeed, article here, if you click on this one, Chinese gold imports slide in June, basically higher prices, import duties, and taxes are the main causes for decline of physical gold demand in Asia. Gold consumption plunged 7.7% in China in the first half. Now, that decline was led by a decline in jewelry. Yes, there was gains in gold bar and coin demand, but not enough to offset the decline in jewelry demand. Many people don't realize that the largest percentage of newly mined gold, 70% of it, goes not to central banks, not to investors, but to satisfy jewelry demand. And I think that's a point where a lot of people are thinking that because of the times we're in, that gold demand is skyrocketing, and that narrative is not correct. Gold demand, especially in Asia, is price sensitive and largely driven by jewelry, and that demand is down. And it's down not just because of prices, but as I mentioned, because the Indian government has placed a massive tariff and sales tax on gold. Now, there may be some smuggling that offsets that. However, it is not, in my mind, going to offset a dramatic decrease that we've seen in both China and India, where we've got in China 30% decline on Shanghai Gold Exchange volumes, and you've got a 45% decline in Indian gold imports so far this year. The U.S. economic data this week was probably the only good economic data were the new home sales. Now, they're up, but they're probably at their highest as they've been since 2007. But that's not saying much because prices had hit rock bottom by 2010, 2011. Even at around 600,000 seasonally adjusted new homes sold, that amount is still at levels last seen in the 1960s and 1970s. So new home sales, while they're up dramatically from their massive lows of a few years ago, they are still they're at levels which we last saw when the population of the United States was about 40% lower. Prices are higher, but the volume of home sales is not really up significantly, and we saw that later in the week when they released the home ownership rate, which now is at the lowest rate since 1963. So higher home prices have only helped those that own homes, but has not helped those who are looking to buy a home. So new home prices and existing homes prices have increased, and they call that a recovery, but the sales have not been significant. They're up from a few years ago, but they're nothing like they were about 10 years ago. And therefore, the number of people who have homes, able to afford homes, is now at a 50-year low. Again, you can get the U.S. daily sales update on the site. As a result of the low sales of American Silver Eagles and appearing there to be a glut in the amount of American Silver Eagles that dealers and authorized purchasers have, the premiums are very low. Many dealers are offering Silver Eagles at about $2.50 over spot, which reflects the fact that they're able to get them in some instances from authorized purchasers at or below the $2 premium that the U.S. Mint charges its authorized purchasers. And remember, authorized purchasers purchased a lot of silver earlier in the year when there was a ration of 1 million Silver Eagles a week that they could buy. They stocked up on them, hoping that if there ever came a shortage, they can then ratchet up the premiums. But it looks like what they've done is they've fallen into the trap of the U.S. Mint to avoid a shortage, and now they're all well stocked, and the hopes of trying to get 50% on the premiums on the Silver Eagles that they've accumulated doesn't look like it's going to happen unless we get some kind of dramatic increase in retail sales buying in American Silver Eagles. It may happen, but there's still a lot of inventory to work off that the authorized purchasers and the dealers have. Did see an ironic story earlier in the week. You know, the media is always trying to make the current gold and silver increases as some type of short-term story. It's a spurt, it's over. There was one story on Bloomberg, it's called the ups and downs of gold. And in fact, if you look at the URL at the bottom, it says quick take, the fall of gold. And in the article it said gold has lost its alluring gains, but those alluring gains have returned because the day that was published, I think it was Wednesday, the price had been $13.15. Then the Fed came out with their meeting and said they weren't going to raise rates. And then the GDP numbers came out on Friday. And supposedly the fall of gold didn't happen. Gold rose from $13.15 from the day that article was published all the way up to $1,350 per ounce. Chinese gold mining hit 450 tons in 2015, the highest in the world. And again, the amount of gold that China mines, that doesn't all end up at the People's Bank of China, because if it did, in 3 or 4 years, they would have the current amount, the 1,823 tons that the People's Bank of China has on their balance sheet. They'd have more than that. So obviously, what gets imported into China, what gets mined in China, doesn't all end up with the People's Bank of China. That doesn't mean that the People's Bank of China is lying about the gold reserves. It just means that the People's Bank of China is not the place where China keeps all of its gold. Japan unveiled another $265 billion stimulus. Ironically, this was not enough. So therefore, the Japanese yen rose against the dollar because people were expecting there to be a bigger stimulus. So now it's not a matter of being prudent and not doing stimulus, it's just a matter of being prudent and not doing a $1 trillion stimulus and only doing a $265 billion stimulus. Durable goods were down. Again, that's a big signal in the economy. The economy is not doing well. Feds left rates unchanged, and then here's a gold chart that shows immediately after the Fed announcement, gold taking a nice ride up the elevator, silver doing the same. Another story, Indian gold discounts hit record highs as demand falters. So the price of silver is high, there are heavy import duties on it, and therefore people who have gotten gold into India, either by paying the import duty or smuggling in, are not finding a robust market, and they're having to discount their gold in order to get rid of it. In fact, it hit record lows in India, the discount on physical gold. Asian Indian gold demand lower on higher prices despite discounts in India. So even with the discount, the physical demand has been muted in India and also muted in China and Hong Kong, some say, as part of the increase in price. We mentioned earlier, home ownership rate falls to the lowest on record. More U.S. Mint sales data, nothing to report here today. No American Eagles were sold, and only 2,000 American Gold Eagles were sold on this particular day. I think this was Thursday. Interesting point. Platinum Eagles have begun to be sold again by the U.S. Mint. The 1 ounce form only. They went on sale earlier this month, and to date they've sold 19,000 of those American Platinum Eagle coins. They're at a discount to the American Gold Eagle, so some think that's a good bargain where you can buy platinum at a price cheaper than gold, and you can buy them now. They're available, and there's some links on the site where you can find those American Platinum Eagle coins, and if you do buy them through the site, Smaulgld will get a small commission. Keep that in mind. That's a good thing. Silver is the top performing commodity so far in 2016. You can check out that link. Fed chatter. Something that we had predicted here was the Fed will never give up. They're not going to raise rates. They will always talk about raising rates. They can't admit that their policy is a failure. This San Francisco Fed president, John Williams, he's not worried about a recession, even though the data showed in the first quarter when they revised it, the growth was 0.9%. The second quarter first estimate is 1.2%. That basically there is no growth in the economy. And he's still talking about raising rates twice this year. Dallas Fed President Kaplan says he's hopeful for solid GDP growth in 2016. I don't have much confidence in a Fed official who's hopeful, because these guys tell us that their policies make things happen, and so far they haven't made anything happen that's on the side of being good for the economy. So now he's hopeful that something's going to happen in the second quarter. I'm just a disbeliever in that. As I mentioned, the yen soared versus the dollar because the BOJ disappointed on stimulus. We've got some more U.S. Mint sales update here. Again, the U.S. Mint is sold 1,370,000 American Silver Eagles this month, and only 30,000 American Gold Eagles. Year to date, 27.6 million American Silver Eagles sold. Looks like they're not going to hit that 47 million record of American Silver Eagles they hit last year, and American Gold Eagles are at 436,000. Doesn't look like they'll come anywhere remotely near something like a million ounces sold, which again is not that much, a million ounces in the grand scheme of things. So American U.S. retail silver and gold sales they're strong compared to the last 30 years, but compared to the last 5 years, especially in the last few months, the silver sales have kind of fallen off dramatically, and the gold sales, they've picked up from the last year or two, but they're not what I would think you would have when you're seeing this big increase or in sentiment and big increase in gold in general, because that demand is being met, unfortunately, through increased interest in ETFs and COMEX futures contracts. That is where the volume of interest is. It's not in the physical mint sales, because we're not seeing anything spectacular on the gold sales at the Perth Mint, the Canadian Mint, or the US Mint, and we're not seeing spectacular numbers coming out of India or China. And even Russia has slowed its gold purchases this year versus last year. Now, Russia was the largest central bank purchaser of gold in 2015. They actually bought more gold than China did. And when I say China, I mean the People's Bank of China. I'm not saying that gold consumption in Russia is higher than Chinese gold consumption. It's just that the Russian central bank added officially more gold last year than China did, and they've added more gold this year than China did, but still Russia's numbers are lower this year than they were last year. Okay, that's about it for this week. Remember, please check out Smaulgld.com. Next week on the website, we'll be releasing U.S. Mint numbers for silver and gold eagles, platinum eagles. We'll be releasing Perth Mint numbers, and we'll have a few more stories for you. Please subscribe to Smaulgld.com and also subscribe to this YouTube channel. Thank you very much for listening.